Rosie,
Yeah.
I'm just done here. Good day and thank you for joining today's live stream. My name is Tammy DaCosta and I'm here on behalf of CoinW. Now, before we go to just charts and everything, the crypto market is taking a lot of strain, but so are other markets. And today we're just going to discuss some key levels as well as what is happening in the global economy. So sometimes when I do show you other data, I do get a bit distracted. So the first part of this live stream, I'm just going to focus on explaining exactly the developments, not only with crypto, but in markets as a whole, and then basically what we can expect and where to go from here. And then we'll jump to the charts and just look at exactly what's happening. Okay, so firstly, yesterday marked 3 years since the invasion of Ukraine. So that was a big day, and currently we do have talks about, Russia-Ukraine deal, and the US is obviously involved. And then we've also got a lot of other things happening. So geopolitical risks are high, and we'll go into that a bit later. And then with regards to crypto, not only have we been seeing a sell-off, especially in altcoins, but now we've seen that Bitcoin, which was previously really, really resilient, and that was almost considered to have adopted that safe haven appeal, it is now following suit. And today, the Bitcoin futures, last time I checked, were down approximately 5%. I will have a look at this after that. I'll have a look at that in a bit. So what we see now is Ethereum has now dropped. At one point today, it was also, the losses were in double digits, and it was basically out of the top 100 coins, it was actually leading losses. We also saw the gold and Bitcoin ratio. It was at one stage roughly 6% higher. And this is all important because when we look at the charts and we look at something like the gold and Bitcoin ratio, remember when it was Trump's election and everything, that is when Bitcoin really, really received that boost in sentiment. And that's outshadowed gold. So we saw, if we look at yearly gains, especially last year, we saw that gold really, really, it's generally in an environment like that, where interest rates are expected to go lower, gold would be one of the outperformers. But relative to crypto, especially after the Trump was elected president, we saw that gold definitely lagged. But now we're seeing a change. And if we look at the dynamics or what has happened even over the past few days, with returns, or basically in terms of crypto milestones, we saw that the SEC, which under Gary Gensler, he was very much against crypto. And he was the one that raised investigations or, probes into the likes of Ripple, into Coinbase, and there's numerous exchanges actually. And over the weekend and yesterday, we saw some positive developments there. So we saw charges or investigations into the Robinhood crypto trading arms, into Coinbase and OpenSea. All those charges and probes were dropped, which means that, okay, the regulatory, it shows you once again that now crypto is part of the regulatory environment, and it's now, not so much frowned upon as it was previously. But then comes something like we heard today, the Bybit hack. Okay, so this is also a major, major exchange. And so when a hack like this happens, and apparently it wasn't even a hack into the code, then it obviously raises concerns. Not only concerns about, regulations and whatever, but concerns into the safety of exchanges, and especially because it really relies on technology, there's always that potential risk. Then again, there's risk anywhere you look. So that's something that we need to keep an eye on and developments into that. But the fact that as well now it will be taken a lot more seriously than it previously was. When there was a hack or something like that, remember, crypto wasn't regulated, Bitcoin wasn't regulated at previously before futures and it got accepted as part of CME exchange. So it's now classified as a commodity. So at least now we do have a bit more regulatory support. And we've got things that are happening to actually boost sentiment. But we also need to be vigilant of the fact that when Bitcoin, when Ethereum, when crypto actually throughout last year, even though there was a definite positive boost in sentiment, the main boost and the main push was not in terms of regulations as a whole, but it was in terms, or at least not in terms of, a lack of hacks, or now it actually been overseen and you've got a physical or a present board. But it was the fact of that Trump election and the build up to his presidency or his inauguration on the 20th of January. So we saw, and the thing is as well, even though last year we already had risks of, we saw inflation was still high, we were still in a very high interest rate environment, the economies still tended to perform well, especially in the United States. Now it's basically the problem with controlling the supply of money like the Fed does. So what happens is there's, in terms of when there was the COVID pandemic, for example, then if people or the job data is lagging, what does the Fed do? They've been printing money. So the debt levels have risen. At the same time, the economy has been strong, but it's pushed inflation very high. And that's what's influenced interest rates. Interest rates have been high, and that's not good for crypto or non-yielding assets like gold. Then last year we saw a shift in that narrative, and we saw interest rates expected to be cut. We did see decrease in interest rates, especially towards the end of the year, and that wasn't necessarily, it didn't have anything to do with Trump becoming president, but it definitely also added an additional push for assets, stocks, US stocks, and especially US tech stocks, as well as for crypto. Now, in terms of looking at the actual election, we saw afterwards, after Trump it was announced that he had won the election, then we saw Bitcoin gapped higher with a lot of the altcoins. Now, previously to that, it was a very long while ago since, if I'm not mistaken, it was the previous, I think it was like 2017 or whatever. I'll check the details now. But anywho, it was quite a few years back that the crypto market cap was above 3 trillion. If I'm not mistaken, it was in early 2018. And that was when things like, or coins like Ripple were also trading at their all-time highs. And I think then, or 2020, anyway. So now what we've seen is, since that election or that announcement, we saw it wasn't difficult for crypto to actually push above that 3 trillion mark. And there was a lot of breaks in price action that we saw. Now, a break occurs when, for example, you've got an open and a close of a candle. And we'll look at this when we turn to the charts. Now, if it gaps higher and there's a break basically in prices, that would be a bullish indication. So that means that you've got the candlestick wick, which is represents the high of the candle. Whether it's the weekly, if it's the weekly, it would be the weekly high. If it's monthly, monthly high, and so forth. Then you've got the body of the candle, which represents the open and the close. Okay, if the open is higher than the close, obviously then prices, if you bought low and you sold high, it's bullish. But if it's the other way around, it's the other way around. So, and then the bottom of the wick is basically, or the lower wick shows the low for that candle. So now when we're talking about gaps, that means that prices didn't open near the previous, like open or close, wherever they ended, but basically there's a definite gap in prices. And that is important, especially when we're looking at price action and where markets could go. So that's just a very clear shift in sentiment, and it can actually be interpreted in a variety of ways. Now, previously, before the election, we had Bitcoin struggling to actually gain traction above the previous high in 2021, November 2021, when prices got to 69,000. Okay, then in 2024, in March, prices did get above 69,000, struggled to actually get to 73,000, and then we saw a whipsaw and consolidation. Then the election came and the announcement, and we saw a clear gap where prices basically just ripped higher, ripped through 69,000, went above 70,000, and actually went to 80,000. And that's where we actually saw that gap. And as I said, when we look at the charts, we can see it more clearly. Since then, we have, in January, we tested 110,000. So there's been numerous highs even throughout this year, and we're only mid-Feb. However, that boost in sentiment, that institutional adoption, all that positivity with regards or in the build-up to Trump's inauguration, that's starting to dissipate. Because yes, we've had lower interest rates, but the US is still keeping their interest rates relatively high at 4.5%. At the same time, we've got geopolitics. Now, what are geopolitics? Basically, geopolitics, or let's say the macroeconomics. So those are things happening in our macro environment that are going to be impacting all of us in one way or another. That's different from microeconomics, which, for example, if you're looking at different sectors, businesses, there's basically internal factors that then contribute. So macroeconomics or geopolitics, macroeconomics, we're looking at fundamental data such as interest rates that are also influenced by inflation, employment, and things like that. When you've got a country or nation that has a strong labor force and where employment is high and unemployment is low, what is happening is there's more productivity in that country. But not only that, that means that manufacturing, services, sectors are basically growing and people are contributing to the economy. In return, what do they get? They get wages or salaries. So that then influences prices. So when there's more of a demand for prices, then, okay, people can buy more, people can invest or even trade things like Bitcoin or things that they wouldn't have had money to trade previously, or basically additional capital. As we say, you shouldn't trade with capital that you really, really need. So, I mean, in hindsight, basically they've got spare cash or a bit of cash to put aside. But then what happens is when we have interest rates increasing, your cost of mortgages and everything, that then becomes more expensive. And so slowly but surely, consumer spending decreases. Now, when the economy is growing and we've got that demand, it's not only demand for goods. We can see it, basically look at the correlation between US economic growth and then look at something like the S&P 500, which is obviously, well, it represents the top 500 companies in the US. So if the economy is growing, then yes, those companies are going to be growing or benefiting. And naturally, we get that, okay, then economy is growing. So then demand pushes prices for goods and services higher, supply is lower. But as long as wages and that grow at the same pace, then we all good to go. Okay, happy days. But when wages or when employment starts to struggle, so now costs are getting higher, whether it's costs because of higher interest rates or whatever, what starts happening is now, okay, for example, companies can't employ additional people. Companies, you see a lot of the time where we start getting staff layoffs, and we've seen those being announced as well in the past week. So when you have companies like, for example, Microsoft saying they're not going to invest as much as of infrastructure, or they're a bit cautious, then what happens is we start getting fearful. Now, in terms of, so we've got that, and then we've also got at the other end of the spectrum, so now when Trump won the election, demand was high because now corporate taxes were going to be cut, cryptos were going to be regulated and adopted, and that was also what boosted sentiment. So we ended 2024 on a very high note, and not only in terms of crypto, but in terms of stocks, and especially in terms of the US dollar. And this has been actually a consecutive, it's been, the US dollar has been leading gains for a couple of years. And because of the influx in stimulus and everything, that also helped it in the overcoming of, or in the aftermath of, the COVID pandemic. Okay, so we've got all of that. And then we've basically, if we look at that, now we see, like I said, there's some leveling out, but we've also got other risks at play that have now dampened sentiment. So now Trump actually gets inaugurated on the 20th of Jan, and what's the first thing he says? And if you followed Trump, or if you actually have followed markets or economics, in 2016, Trump policies were also very much about tariffs. And that's okay. Actually, we're going to tax this. We're going to put, so it's basically saying that any imports from other countries are going to have additional taxes and levies. Now, what this means is for other countries, what happens is now their GDP or their exports are now going to decrease, and those that are relying on or imports from the US, from other countries, now they will have to pay additional costs, which raises their costs. So this is all done to promote companies and that being in the United States. And that's where corporate taxes come in, where Trump is like, okay, cool, we're going to do business like this. Okay. And he's saying, if you now build companies in the US and keep your business here, you're not going to pay 21% tax. You're going to pay 15%. So now you've actually got or companies have additional money to now invest and to also grow the economy. In terms of crypto, what does it mean? We've also had blockchains, and blockchains, if we look at Bitcoin, the original blockchain, and that was for peer-to-peer transactions. Then we had Ethereum, that was developed at a later stage. So if I'm not mistaken, that was, I think 2011 or 2013. I think 2013, actually. Sorry. So what we have then is Ethereum's now, okay, cool. Bitcoin's got a limited supply. So if we're looking at the future and if we want to actually do these transactions on a bigger scale, we are going to need a blockchain or a system to process those payments and those transactions without getting backlogged. Okay? So in the realm of things, where now we've still got wars, we've still got now Trump talking about tariffs, we see other countries retaliate. We've also just had one of the biggest historical years in elections ever, which was in 2024. So we're getting a transition not just because of the US presidency, when in of itself is a big deal, but we've also had a lot of elections globally and a lot of shifts in power, or at least, we're going towards transitionary periods. On Monday, we also recently had the German elections. The Conservative Party actually won majority, and now we're seeing coalition talks. But that also poses a risk of Germany leaving the EU. So all of this plays a role in driving sentiment and in driving appetite for risk, especially when it comes to altcoins. Yes, that is a lot. The risk is much higher. A lot of those altcoins aren't traced on an actual exchange like Bitcoin is. So even though we saw a positive boost in altcoins, Bitcoin has still been leading the gains. And that's what's been driving its resiliency as well. Now we turn to the recent weeks. Okay, so once again, we've now got Trump still talking about tariffs. The first thing that he implemented or that he proposed was 25% tariffs on all goods from Canada and Mexico. Okay, very quickly, actually, they all came to the party and he said there's going to be a 30-day period where that won't be imposed. So once again, we saw that risk and then we saw a pullback. So now that 30-day period is also coming to an end. So once again, people are like, now, okay, what happens if that actually takes place? And Trump is saying, until you come to the party, not only with regards to security and everything, like he's got his reasons, which was why there was also like the 30-day grace period, but he's also saying, okay, we also need to see what you can bring to the table. So we've had those shifts in sentiment, and we've also had a very, very strong rally that's been building up since November amongst the crypto market. So to be quite honest, if we look at crypto prices today, we can't really be all in like shock and horror. However, there are some critical levels to watch out for. And I'm going to turn to that now in a second. Just one more thing. We still have a lot of risk this week. And we've got Nvidia earnings tomorrow, which is huge, especially when we're looking at US tech. If we look at the S&P 500, which, as I said, top 500 companies in the United States, and we look at the US, or the US 100, the NASDAQ, which is the top 100 tech stocks in the US, those have played a major role in also driving economic growth in the US. And Nvidia is one of the largest. That it was the largest company not too long ago, but it was also the top performing company for the past 2 or so years. So it's an industry leader in artificial intelligence, and that's why it is a big deal. The market cap, if I'm not mistaken, is still above 3 trillion as well. So because we've also got the Dow Jones, we've got the NASDAQ and the S&P 500. So the Nvidia is a constituent of all three, but those are also, it's weighted. So it's basically what means is the larger the company's market cap, then the larger the percentage of the actual index. So Nvidia, in terms of percentage, is huge percent, or a very large constituent of those indices. Like I said, once we go to the other screen, I can actually look at those exact numbers. But let's say roughly it makes up about 8% of the NASDAQ. So that means if there's just a miss in estimates or anything like that, or the forecasted growth isn't as strong as it was previously, that definitely will have an impact, not only because of the fact that it's a large constituent, but also because artificial intelligence and technology and innovation have been driving those moves for so long. So when we have, and as those companies have grown, and it's like, for example, Coinbase, you wouldn't have really thought that Coinbase, if we look at 2017, 2018, 2019, so forth, crypto, the future of crypto was very, there was still a lot of skepticism, and rightfully so. I believed in the concept. With regards to investing, I was skeptical because of the fact that I didn't think that central banks and that would allow something like a digital currency or whatever to bypass central banks. That way governments aren't getting their taxes, banks aren't getting their fees, and it did pose other risks. So back then, the chances of a company like Coinbase or MicroStrategy actually being dominant players in the global market didn't seem very likely. And now we look at them. They are huge. MicroStrategy is the biggest holder, well, in terms of corporate, of Bitcoin. And so a lot of Bitcoin also makes up a lot of their portfolio. Okay, where artificial intelligence comes in and so forth is, what is artificial intelligence? And it relies on coding. We've also got quantum computing, and all of that. We're going to need a way to communicate through systems, and also we're going to need some regulations around that. What would be the best way or the easiest way? Is probably through a blockchain. So there are definitely ties in that regard as well. So we see a lot of interlinking through that. So because Nvidia has such a major role in not only artificial intelligence, but also now in making chips that are used for this defense and for a large majority of purposes, it does definitely have a knock-on effect in expectations and so forth of what's actually going to be developing. As I said, there's been an immense increase in defense spending across the world, And so that may actually help Nvidia. And if we do see a rally, we could maybe see a potential rebound in something like the S&P and NASDAQ, which have been coming off slightly, but maybe, just maybe, that will also boost crypto. At the moment, I'm still skeptical. And as I said, my whole opinion is, even though we've got other risks in that, we have to look at price action, but there's definitely an interlinkage too. When we're talking about this week's risk, I think there's technical levels, and then in terms of the economic and the geopolitics, it will also be watching those talks with regards to tariffs and so forth, and then the Nvidia earnings. And then we also get inflation data for the US, which is the Fed's, and we get core PCE, which is consumer price expenditure, and that is the Fed's preferred measure of inflation. So in terms of economic risks, it is a heavy week, and that definitely could be influencing crypto, especially with regards to short-term volatility. And if you're an investor, then maybe, I'm not saying don't worry about it, but a lot of the times we do see, if, for example, you were holding crypto or Bitcoin in 2017 at the peak, okay, and you bought there, and then there was the sell-off, you can't say you expected the current environment. But if you had held and you just forgot it in your wallet and whatever, you would definitely be smiling right now. But why? It's because you couldn't lose more than you actually put in. However, when you're trading, and especially when you're trading with leverage, now you're only putting a 10%, or whatever the case is. It depends on the exchange that you're trading on. For example, if you're trading on CoinW, you would still need to see the different margin requirements for the different cryptos. And so the point is, you're putting down a certain percent, which is kind of considered a deposit, but you are trading your exposure in the underlying market. So let's say prices are, just to keep it simple, 90,000, okay? You're required to put in 10% deposit. You are only putting in 9,000, but you're getting exposure to a full Bitcoin of 90,000, okay? So now, if prices go up, it's really good for you, because if you're buying, then you're making, the difference of 9 times what you had before. But if you had just invested and that went, and you put in 9,000, you wouldn't have had, or like now, that's not one Bitcoin. So it would only be a portion of the Bitcoin, which is a tenth. So that is where the risk comes in, because now on the other side of the spectrum, if prices go in the opposite direction, then, as much as your profits can really, really climb quickly, so can your losses. And we've still been in a bull trend for the past, especially, throughout last year, and then actually throughout 2023, in the 2023, 2024, and then we also had the Bitcoin halving, which was an additional catalyst. So we've had a long-term bull trend. Now we're seeing that retracement. But what's important is, with regards to the charts I'm going to show you now, is the actual retracement levels that we have. Because even though a lot of people say, okay, technical analysis, it's not proven, so forth, you can't look at a chart and see where things are going. No, you can't. I don't have a crystal ball. I wish I did. But even in terms of economic forecasting and looking at inflation and everything, we can have predictions. So as economists as well, we look at inflation, we look at employment, and we say, okay, this is what may happen or what's expected to happen in interest rates. And then this has knock-on effects. However, in the same way, anything can happen. So we're looking at known data and making economic forecasts, but anything that happens in there, then that does change dynamics, and that could really, really change the outlook. The same way if we're looking at prices on charts. To me, technical analysis, if you study it, it's also a reflection of sentiment. So for example, let's look at Bitcoin. Now, why have prices gone up? And we can see those bullish moves on the chart because it's been general sentiment. Even though we've had those economic developments in the background, it has instantaneously been reflected in the prices. So that is where technical analysis comes in. And now that we turn into the charts, I'm going to show you exactly how. I'm going to switch off my screen now and flip screens. Okay. I'm just trading. There we go. Okay, hopefully you can all see my screen. All right, so this is just it's actually the economic calendar, but I'm not focusing on that right now. We are going to, as I said, look at cryptos. Okay, so just from here, looking at general prices, we can see that there has been a huge sell-off. It's looking like a sea of red today. So this is definitely not a happy picture. All right, so at least there are some coins that are now leading above Ethereum. Ethereum has bounced back, but we can't say it's a real bounce back. So we can see, obviously, this is reflective of fear and just those sell-offs and the changes in expectations. All right, and now if we go to, let's just go here. So another thing that I quickly want to show you is if we look at the XAU BTC. Now this represents the difference between, the ratio between gold and Bitcoin. So I spoke briefly about this earlier. So we're going to go here and we are going to look at, let's look at daily actually. Okay. So for quite a while, it's actually been quite a long while. We have seen basically since November 2022, actually, we have seen, because then there was a retracement and then pull back here. So since 2023, it's safe to say, we can see how gold prices have been, long-term, have been on the long-term downtrend in comparison to Bitcoin. Okay, let's do weekly so it's not so messy. Okay, so there we see 2018. Okay, then we saw here March 2020. And then remember, this was also a high point because this is when crypto, once again, we started seeing that rebound. We saw the institutional adoption, and that is the start or the trigger of the bull trend. And this, obviously, when prices are going lower, it means because gold is the numerator and Bitcoin is, well, basically, this is the ratio. If gold is higher, this is going to increase. If Bitcoin is higher, then this is going to decrease. So if we look here, there has been a strong downtrend, which has been reflective or indicative of the fact that Bitcoin has been outperforming gold on a relative basis, basically since 2022. Okay, well, since a long time before, but I'm saying the start of this, well, okay, 2023, we agreed on that. So since Jan 2023, we can see that was for the gold Bitcoin ratio, this was the beginning of the bearish trend, which means this was the beginning of the bullish trend or the real like strong bullish trend in Bitcoin in comparison to, for example, gold. Now we've seen Bitcoin prices rip to yet more like fresh time highs. And once again, I do still believe technicals can be used as gauges, but let's see what happens here. So from November 2024, we had that break. And why did we have that break? Because of the fact that Bitcoin and crypto got such a strong push from Donald Trump's election. So we've had that gap lower here, representing Bitcoin dominance or a strong Bitcoin in relation to gold. So now what we see is then we had a leveling off, which showed that Bitcoin, or at least a bullish trend, was kind of losing steam. Here it tries to gain traction, goes above the 20-week moving average. Okay, so this means gold is now strengthening because we have that uptick. So from this point here, so from the inauguration of Trump, we see that, okay, nothing's really changing in terms of there's no sudden policy changes for crypto. So what happens is, okay, so Bitcoin starts falling off and gold, which is, remember, the first mentioned asset, starts rising. So this ratio then starts rising. And now we are at a critical point because we are on our way to fill that gap that occurred from the election. If that gap gets filled, what happens is that means that Bitcoin gains have pretty much been wiped out, or at least the gains from in the aftermath of the election. So now let's go look at this actually. So if we look here and let's look at the weekly chart here, what we can see, and I don't even have to, well, now I'm not going to show these. Okay. So now what we see, and don't even take this into account, what can we see here from the 2020, March 2020? Once again, we saw on the gold Bitcoin ratio, we did see that 2020 move when actually we started seeing that shift. So what we saw here is now Bitcoin starts to gain. Okay. Here we see from, once again, 21st of December and then to the Monday, because this is the futures chart, so it's not showing weekend trading. Okay, so here we can see doji indecision then we see a gap higher. And this is bullish. So we see prices then go higher. They try to, they went higher they tried to test 65,000 in April 2021, didn't get there, retracement, okay, bounced, then 2021 high, and then so forth. And then we saw that round cup, or at least that teacup, and then we saw that breakout, and then we came to that consolidation. As I said, last year, March, we did try to push above, we did manage to break that prior high, and we managed to temporarily break 70,000, but it couldn't hold. And that's when we saw prices then struggling to actually gain traction. This is when the election, well, basically, because this is showing the Monday to the Friday, the election was held on the Tuesday, the 5th of November. The Wednesday was when Trump was announced as the next US president. And then we saw that boost up to, well, basically above 75,000. And then on Monday's opening, look at what happens. There's a gap. So that price gap, once again, it shows the bullish shift in fundamentals. And then we had a lot of bullish momentum in Bitcoin. And so if we look at the Fibonacci, so we're still bullish because that gap's still holding. But the momentum of that uptrend has definitely lost steam. So here I've taken from where the gap started. So from that Monday, from this weekly, so from the 11th of November, that week, where we saw that opening gap, I've used the Fibonacci levels from that level to the high in January. And this was Trump's inauguration and whatnot. So I've used that. At this point, that means that prices have retraced 100% of the move. Okay? Currently, or as of today, prices have retraced or went down to test the 78.6% retracements of that move. That means that bulls have nearly given up about nearly 80% of their gains that have followed Trump's election. So this is huge because it does, once again, it shows that generally, I discussed this last week, generally if I'm looking at the primary trend or potential change in the primary trend, which is the longer term trend, then I would be looking at a basically 2/3 pullback. Okay, anything after that, then you kind of, it's a warning sign. Now, if we're taking this move, so I can't necessarily, because it's not necessarily taking in the full year and so forth, but if I'm looking at this particular move, I can see that yes, there was a bullish, but we see how these candles as well kind of respect certain lines. Okay, and in technical analysis, once again, these dojis represent different things. Like here, what happened here? Okay, so here we have prices open. Okay, and then throughout that week, we had bears trying to push prices down to 91,000. Now remember, this Fibonacci wasn't actually in place as yet because this high hadn't been met. So we don't even have to have this. We can have it. Yeah. So if we remove that, and we can remove this as well, because we don't want to make it messy. So if we look at this candle right here, so here would be the open, okay? In that week, we had bulls try to push prices to 100,000, okay? And then I think they did, if I'm looking at the half of that week, let's just see. If we're looking at the half of that week, they just bypassed 100,000. So 100, 315, okay? Then what do we see? A pullback. So this shows that, okay, here, Bitcoin is quite pricey. So a lot of bullish momentum. There's been fundamental shifts. But here, okay, are we getting overvalued? And this is when, at the same time, we had bears trying to push prices to 90,000. They didn't get there. And then we saw, quite soon, that pullback. And if you look at the daily chart, then you can see exactly when this happened and so forth. And so this is indicative of, okay, a pause in sentiment. And these are actually, like, for example, here, we saw this is more bearish because once again, we see bulls try to gain traction, and they got to a high of 101,435. So we start to also see how psychological levels are now coming into play. 100,000, 101,000, 91,000, 92,000, 90,000. And those all form part of technical analysis, but also, in a way, behavioral finance. So now we're getting to a point where, okay, we've had all that optimism and that, and we start seeing, if we look at just the candlestick wicks and those bottoms, just from this move here, okay, it has actually, that 91,720 has definitely provided an additional layer of support. Now, that support held even here through December, through Jan, and then even in Feb, up until now. So now we've gotten a break in that support. And so Bitcoin is now testing the lowest levels in 3 months. That's a thing. And especially if we look this week alone, while Bitcoin is down 7.09%. It's only Tuesday. So this is all big warning signs, as if to say, well, it is saying, okay, now we actually have a big week of economic risk. We do have other things going on. So now the global environment or the perspective isn't actually looking too peachy. And this is when we see that shift in sentiment. For the downside, we may actually, if we look at now the daily chart, so let's go to daily, and this is where I use additional indicators such as the Bollinger Band. Now, generally with the Bollinger Band, this almost acts as, well, this is the upper band, this is the lower band, this is the 20 period smoothing average. So these are all, this to me acts as an additional zone of resistance. The lower band generally acts as additional zone of support. Now, if we look previously, a lot of times what happens is this almost acts as a, prices may test the lower bound and then they bounce back. But on the daily chart now, we can see that from yesterday to today, there's actually a gap lower. So now, even though it hasn't appeared on the weekly time frame, to me, this now holds as a very important zone. So for me, direct resistance would now be 92,775, and then basically we could look at a potential push higher. If we now get a push, so that's 93,990. If prices or bulls manage to actually take back control and we fill this gap, then, and especially if we do it in the next few days, then yes, I would be more optimistic about further upside move. However, the fact that we are now testing these bands and these lower bands, which now, if we look back here, is pretty much we're nearing November's moves. To me, this is an additional warning sign. And maybe this could just be, like I said, reflective of sentiment. So it could now just be a drawback or pullback. But especially trading crypto this week, we need to realize when when the Federal Reserve speaks and when we get, additional threats of trade wars or anything that impacts sentiment, and we have inflation, generally this is a cause for volatility. So even if we do get a recovery for this week, just make sure, well, to me, like this will be a very important candle. And tomorrow's candle to see where that is. And as I said, there's other additional factors to watch, but you need to be vigilant of the fact that there may be further downside. But on a positive note, if this gap does get filled, then we may see bullish continuation. So that is what I'm looking for Bitcoin. Ethereum is similar. Like I said, Ethereum has really, really been taking strain, especially today. It is now, when I did the title, it had gone below 2,500, which had been a key zone of support. We are now below 2,400. And so we will need to also monitor this one to see. For me, the 3rd of Feb, remember we did see quite a big pullback there on that Monday, the 3rd of Feb. And at one stage, when we saw this gap here, prices for Ethereum were down 18.65%. So that was really, really a big pullback. And then we had been seeing, I'm not too sure where this came from. Oh, wait, sorry. Yeah. Okay, so we saw prices pull back to 2,262. And then once again, prices broke that lower band of the Bollinger Band and then managed to go up. But it has still since been lingering. That gap is nowhere near full. So for now, and now we've seen another gap lower. So the next big level for me to watch is the 2,262. If that zone is broken, then yes, that's going to bring 2,000 into play. So I'm very cautious with regards to altcoins in particular, but with regards to crypto as a whole this week, even especially in terms of short-term volatility, there's definitely additional risks to be aware of. Okay, so we are out of time. Tomorrow we will look at technicals since we've covered fundamentals. And yeah, so we'll basically do more price action and then potential setups. Thank you for joining once again or for watching, and I will catch up with you tomorrow. Yay!